5 mistakes. That's all it takes to wipe out your entire trading account. And I can tell you, I made all of them, some even twice for good measure. If you're watching this video, chances you're already lost money trading, or you're about to. Here's the uncomfortable truth. 90% plus of traders fail, and it's not because the market is rigged or because they lack intelligence. They fail because they keep making the same 5 catastrophic mistakes over and over and over again. But here is the good news. These mistakes are 100% avoidable once you know what they are. In this video, I am going to show you the 5 worst mistakes that are quietly destroying trading accounts left and right all over the planet. And more importantly, I show you how to fix them. If you can avoid just one of these, this video will save you thousands of dollars. Okay, let's get into it. Number 1. Emotional trading. The market doesn't care about your feelings, but you should. Emotional trading is the silent killer of trading accounts. It happens when you let fear, greed, revenge, or euphoria control your decisions instead of your strategy. You see it when a trader takes a loss and immediately jumps back in to win it back. That's revenge trading and has a win rate of about 0%. Some look at their profits and intentionally forget to take profit, turning the trade into a loss, which again triggers fear and maybe the motivation to either counter trade or increase the position to get the lost money back. Another prominent issue is to put all your eggs in one basket or fall in love with a token. Emotional bias has killed more accounts than even the worst strategy ever could. The worst part? Most traders don't even realize that they are doing this until the damage is done, because they are caught up in their own emotional death cycle. The solution? Develop a predefined trading plan and stick to it religiously. Before you enter any trade, know your entry, your exit, your stop loss, and your take profit. Write it down. It might sound too old school for some, but keeping a trading journal could help you reflect better. If you think that's too much effort, you might not be made for trading. Seriously. Every high-level job needs education and experience. You can't skip that, especially not in trading. If not anything else, at least take breaks after losses. Step away from the screen and don't trade angry. Number 2. Having unrealistic expectations. For every trader that made millions out of a few $100, there are 10 millions of traders that didn't. The internet is filled with stories of someone turning $500 into $5 million on a random meme coin. And news outlets love those rags to riches tales because they get clicks. But here is what they don't tell you. The odds of this happening are similar to winning the lottery. Do you play the lottery? Or do you bet your financial future on a game of terrible odds? Remember Axie Infinity. Thousands of people genuinely believed they could get rich by playing a video game, investing money they couldn't afford to lose. Most of them lost everything when the hype collapsed. The problem isn't that these success stories don't exist. They actually do. The problem is survivorship bias. You only hear about the winners, never the millions who lost their money chasing the same dream. Expecting to turn a small account into life-changing money quickly isn't a trading plan. It's simply gambling. The solution is to stay realistic and resist chasing a dream. You will make it eventually, but patience is a virtue that you need to hone extensively. So set realistic, achievable goals based on actual market statistics. In Forex and stocks trading, pros aim for about 10 to 20% annual returns, sometimes more in good years. So crypto is already a wonderland of opportunities with 10x to 20x returns or more in the next bull run. But a 1000x or more? Well, that's more like a snowball's chance in hell chance to hit that, and your financial future deserves better than this kind of lottery odds. Number 3. Listening to trading gurus. That guru with the Lamborghini makes more money selling you courses than actual trading. Social media is flooded with trading gurus drawing lines on charts like Bob Ross painting his happy little accidents. I started trading in 2010 with CFDs on indices and Forex, so I feel somewhat weird when I see people going all out with technical analysis on crypto charts. Here's the reality. Yes, technical analysis works on traditional markets, but crypto is a different beast. It's still too volatile and heavily correlated. When Bitcoin falls, everything else falls with it, rendering most of those fancy chart patterns, candlestick formations, Elliott waves, trading hooks, and the unfathomable amount of indicators useless. Oh, and a little interlude here. The word indicator comes from the Latin word indicare, meaning to point towards something. So an indicator is a pointer, not a prover. Now you can say, hey, you do the same, right? Yes and no. There are no courses here and everything up here is for free. And there are no courses planned actually, so this is also no trading advice, since this is something you need to figure out yourself or with a professional finance advisor and not a random guy yelling at you from YouTube. Your trading decisions should come from your own analysis, your own risk tolerance, and your own plan, not from someone else's agenda. So at the moment, they tell you buy this and now, and run. And on a more personal note, I am here for the long game. You might want more action. Different demands need different approaches. And also different timely investments, since day trading is a highly demanding job. So be cautious when someone tells you otherwise. Number 4. Using trading styles that are hard to master. New traders see someone making quick profits, scalping or day trading with leverage and think, I can do that too. No, you can't. No, at least not in a sustainable way. Scalping and day trading require you to be glued to the screen for hours, making split-second decisions under pressure and having the mental stamina to do it consistently. Then there is leverage, pretty much the ultimate account killer. Leverage amplifies everything. Your wins, but mostly your losses. A 10x leverage position means a 10% move against you wipes out your entire position. Now traders throw 50% of the portfolio into leveraged trades and wonder why they are broken within weeks. You are competing against professionals with algorithms, better informations, and years of experience. On their turf. With leverage, you are multiplying every mistake you make, and they benefit. A short calculation here. You have 1K on your account. You go to a random scam broker that offers 1 to 1000 leverage. You take that, trade 1 million in volume, the price goes down 10%, and boom, you owe your broker $99,000 and your life is destroyed. Happened many times already. So the solution is start with swing trading. It's the most beginner-friendly style because you are working with longer time frames, days or weeks instead of minutes. You have time to analyze and make rational decisions, and you are not fighting against high-frequency trading bots. If you absolutely want to trade leverage and try it, treat it like playing with fire. Use only 1 to 2% of your total portfolio and never more like less. The rest stays in spot trades, where the worst that can happen is that the asset goes down and you can DCA it out, and not your account going to zero or even below. Number 5. Never invest money you can't afford to lose. The fastest way to guarantee you will lose money in trading is to trade with money you desperately need to win. You have put rent money into your favorite meme coin because you are convinced this is the one that will finally change your life. Then it tanks 80% overnight. Now you are lying awake at 3 a.m., refreshing the chart every 5 minutes, plenty of knots in your stomach, wondering how we will pay your next bill next month. This is a nightmare scenario, and it happens more often than you think. When you trade with money you can't afford to lose, every red candle becomes a personal crisis. You can't think rationally anymore because the fear of losing your grocery money or rent overrides everything else. You will panic sell at the bottom, chase pumps out of desperation, and make every emotional mistake in the book. The emotional strain doesn't just destroy your trading, it bleeds into your sleep, your relationship, your mental health, and your ability to make any good decisions at all. Trading becomes torture instead of opportunity. The solution? Only invest money that, if it disappeared tomorrow, wouldn't change your life in a meaningful way. If losing it means you can't pay rent, buy food, or cover essential expenses, that money has no business being in the market. Small, consistent investments with money you don't need beat large, desperate bets with money you can't lose. When your bills are covered and your trading capital is truly expendable, you will trade with a clear head, make rational decisions, and have a serious chance at success. Well, so there you have it, the 5 mistakes that separate traders who make it from those who don't. Control your emotions, set realistic expectations, think for yourself, trade a style that fits your life, and never gamble with money you need. Simple concepts actually, but they'll save your account. Now here's my challenge to you. Pick one mistake from this video, just one, and commit to fixing it this week. Write it down. Make it your focus. Because knowing these mistakes isn't enough. You have to actually change your behavior. If this video helped you, smash that like button and subscribe so you don't miss the next one. Drop a comment and tell me which mistakes hit it closest to home. And if you know someone who needs to hear this, someone who is struggling with their trades, share this video with them. You might just save their account. And remember, the market rewards patience, discipline, and smart decisions. If you stop making these mistakes, you start making progress. And remember, as well, you can succeed. Others did it before you. It is possible. Okay, see you in the next one.